Good morning and welcome to Market Opening on our collab show between Business Today and India Today TV. It's just after 9. Let's get you started as markets get ready to kick off for the day. Let's take a look at what's hot in the corporate and financial space this morning. Spotlight will be on the public sector banks. Reports suggest that the government is planning to raise FDI limits in these banks to 49%. That's up from the current 20%. The proposed financial sector reform aims to boost capital inflows and bring public lenders more in line with their private sector peers. Another boost for the electronics sector. Centre clears 7 private electronics component investments in Tamil Nadu, Andhra and Madhya Pradesh under the PLI scheme. Approvals include total investments of 5,500 crore rupees from Kane Circuits, SRF, Sirma and Ascent Circuits. Indian Oil says will comply with international sanctions without specifying whether it will stop buying discounted Russian crude oil, which accounted for a fifth of its imports in the first half of this fiscal, becoming the second major Indian refiner after Reliance Industries to pledge compliance with the US and European sanctions. US indices surging to new highs where excitement cools as trading shifts to Asian markets. Hopes of a trade deal between US and China later this week triggers stock rally on Wall Street. Asian markets down on profit booking. Amazon planning to cut as many as 30,000 corporate jobs starting today. A Reuters report says the company is compensating for overhiring during the peak COVID demand. Divisions to be hit include HR, operations. Analysts say firings also linked to AI-driven productivity gains. Well, let's start off with the big news maker. Shares of government-owned banks could be in high demand today after a report that foreign direct investment or FDI rules could be tweaked for the sector. Currently, FDI in the public sector banks is capped at 20%, and reports say this could be more than double to 49% to help recapitalize banks and bring them more in line with their private sector peers. That's where foreign ownership is of up to 74%, and that's what's allowed in the private sector names. The question is, will the new rules actually spur foreign buying in these banks? Despite the current 20% cap, the highest FI holding currently is in Canara Bank, and that's at just under 12%. The country's largest bank, SBI, has foreign holdings of under 10%, and around 60% of the 12 listed PSBs have FI holdings of below 5%. Let's go across to Hemendra Hazari, who is joining us and an expert on the banking industry. Hemendra, a whole set of reforms have been anticipated when it comes to the PSU banks. This is the latest in the slew of reform measures that we've seen. What are you making of this announcement? And given the numbers that I just kind of rolled out in terms of the current interest by FPIs in private sector banks? Hemendra, can you hear me?
I can hear you.
Okay,
there
Hemendra,
is no
thanks.
Economic rationale for this move.
Okay.
Because, as you rightly pointed out, the foreign interest in index sector banks at the moment is very low, and it is below 10% in most banks, even State Bank of India. Therefore, increasing the limit from 20 to 49% should not move the needle at all.
Okay.
However, the issue may be because of a political reason that the government is testing the waters, whether they would like to give majority control in PSU banks, which is a politically loaded issue. So they just may want to test the waters to see how the political opposition is to this raising of 20 to 49%. Because even today, strategic investors in a PSU bank cannot hold more than 10%, so they won't have any management control. So it is imperative that at least for them, that they have 51% control and a much higher stake in the voting rights.
All right, a really bad line there, but I think the key takeaway from Hemendra, and maybe we'll get him back a little later, is that he doesn't really see any rationale for this move. We'll discuss that further with our experts on the show this morning as well. And joining us, of course, is Shell, as always, and Dharmesh Kant, Head of Equity Research at Chola Securities. Dharmesh, let me come to you on this first. A big move to allow further foreign investment in public sector banks. But as we just heard from Hemendra Hazari, his view is that there's really no precedent for this move, and it won't lead to any real shift or change or interest in these banks. What's your kind of take on this latest reform?
Yeah, good morning. I mean, this is a welcome move. And the way these public sector banks were being managed was more of a, public sector in nature and private sector participation into the public sector bank in a bigger way, where management control and positions by private people into moving into the MD and CEO position of these banks would be more aggressive in nature. What we have seen in the texture of all the PSU banks earlier was the NPA problem, which got resolved down there, sitting on the best of the asset quality. We have very good capital adequacy ratio in place. The only thing which is missing is the aggression on the personal loan unsecured lending portion of the business, which others have been doing quite effectively with the same or a better kind of an asset quality. So I think this financial sector anyways is attracting a lot of foreign capital into the Indian space, and India economy is poised to grow on a very speedy trajectory compared to anybody else in the globe. So this will boost the valuation multiples of most of these banks. Now they will be marked at almost at par with the private sector banking valuation multiples. Almost 50%, 40% discount is there. So valuation-wise, catch-up will be there, good for shareholders. At the same time, businesses will be more aggressive, more competition, and good for us consumers, because now we will have a much better deal, whether we are dealing with private or public sector banks. So I think it's a very good move by the government.
Okay, fair. And actually that brings out a couple of really good points, Dharmesh, both in terms of valuations. We're looking at further consolidation also between those PSBs, as well as, of course, an upgrade across the systems. Shell, let me come to you. We're already seeing a little bit of an uptick on the PSBs this morning, but it's not just this morning. We have been seeing a build-up lately.
Absolutely, Aabha. A very good morning to you. This is going to be the icing on the cake as far as the PSU basket is concerned. Remember, in the last 1 month, we've had 3 transactions on the private NBFC space. Samman Capital, Shriram Finance, and one more that misses my mind immediately, Manappuram Finance. So now you will see, once the mergers are taking place between the remaining PSU banks, some global giant coming and taking stake. Aabha, for the first time in 25 years, credit growth in PSU banks has exceeded private sector banks, and valuations are much, much lower. This is a very, very good trigger. Only time will tell how India today will be proved right on this one. And this is a wonderful opportunity to buy quality PSU banks for your long-term portfolio, no matter what naysayers say.
All right. Well, there'll always be two views, but clearly, seeing some of the advantages there in the commentary coming in from Dharmesh and Shell both. Just counting down to opening bell, a whole host of stocks and news this morning on earnings, of course. PSBs will be front and center in focus after this major reform. Let's pull up the index for you. On opening bell, anticipating just a minor green tick. Yes, there you have it. Profit booking in Asia also this morning. The Nifty 50 today just about steady, but very close to 26,000 on opening. Nifty Bank is just a touch in the red. We'll pull up some of those PSBs and see how they're trading in particular to see the kind of reaction coming in there. Otherwise, seems to be muted across some of the other sectoral indices. Let's pull up, for example, Canara Bank, some of the other PSBs to understand whether or not they're reacting to the reform buzz around a further participation by FPIs. The PSU Bank Index is definitely trending higher. So it's probably the private names putting pressure on the banking index. Canara Bank in particular up 1%. Remember, that's the one that has the largest participation currently from foreign investors, close to 10%. Bank of Baroda is up about 0.3% as well. So a whole host of these names are firing away this morning. Punjab and Sindh up about 1% right now as well. And PNB also up about 1%. So a whole host of reforms slated for public sector banks. It's not just the foreign participation, which has now been increased. It's also further consolidation within the banks as well. well. So a lot of news that's brewing and leading to a lot of excitement in the market around the opportunity and reasonable and fair, attractive valuations also in these banks. SBI, Bharti Airtel, IndusInd, some of the movers this morning. We've got the top movers there up about 1% or so. Tata Steel, Titan, Grasim, some of the names following suit. Let's also pull up some of the earnings reactions and see whether we're seeing markets moving on the back of these. Mazgaon Dock, profit up close to 30%. We've got Indus Towers, a profit down 17%. I'll just give Twinkle a chance to pull up those counters. Mazgaon is up on earnings. Indus Towers has pulled that up. Profit down 17.3% on that one as well. Still up about 2.5% this morning on Indus. Revenue was up 9.7%. So that's perhaps the line that the market's reading. Raymond, profit down 76%. Let's pull up a Raymond and take a look how that's reacting this morning. And Bata also a poor set of numbers. So both of these are retail counters. Bata also seeing profit down 73%. Raymond's taking a bit of a knock on that. And Bata also, let's pull it up and take a look, down 6%. Really poor numbers from Bata actually. Complete miss. Revenue was also down 4.3%. So that's really why the market's taking it so badly. Adani Energy, let's pull that up. Profit down 20% even though revenue was marginally higher. Let's take a look at how Adani Energy is doing this morning on your screen. Let's pull that up for you. Down about a little over 1% or so right now. Shell, what else are you picking up on opening?
Aabha, it's going to be a good day, and the hope is that on the monthly expiry, the close on the Nifty is above 26,000. That makes us a kissing distance away from the all-time high, which should come in the first week of November. Record highs on Bharti Airtel, State Bank of India, Hindalco, Cummins India, Motilal Oswal. So it's the entire market that's lifting itself up for a fantastic rally ahead. And more importantly, gold and silver are down dramatically, which essentially means that money is now moving towards equities. So Aabha, we need to tighten our belt, get ready for a record high on the Nifty in the coming week, a record high on Nifty 500, and on Bank Nifty is already with us. Aabha.
Okay. Now, fintech major Paytm has announced that NRIs can make UPI payments using their international mobile numbers. The feature will initially support numbers from countries like US, UK, UAE, Canada, Australia and Singapore, which aims to make digital payments more convenient for Indians living abroad and strengthen Paytm's global UPI reach. Dharmesh, this morning, that's the news coming in on Paytm. It's something that all consumers will love to hear, of course. Recent numbers have also been steady when it comes to the fintech giant. What's your view on a 197?
Yeah, I mean, it has come out of its solid double zone and it's moving ahead with a clear growth trajectory now in place and well regulated now, which was a problem with Paytm earlier. I think all these options and the new avenues for growth and revenue which Paytm is seeking for, and they have always been early starters. Others follow what Paytm does, so that advantage is always there with them. I mean, couple of more quarters with a steady set of operating profit coming into play, and the growth out there will take it to a next trajectory. So the suggestion is, if you have been holding Paytm for long, stay invested. Even if new investment needs to be done, no problem out there. It looks pretty attractive out there, and it's one of the best new age of fintech plays which the market has to offer as of now. So we are pretty positive on Paytm. Valuation justification will happen after 2-3 years when thick and fast numbers starts trickling in.
Okay, just while we're on the new age listings, Dharmesh, are you eyeing the Lenskart IPO? There's a lot of buzz while we wait for it to open on Friday.
Yeah, I mean, business-wise, everything is fine, but the kind of pricing the Lenskart is seeking, I think that is way above the standards. So recent IPOs like LG Electronics, it was one of the classical case of IPO when you leave plenty on the table for investors to do the cherry picking and enjoy the proceeds of IPO and the delight of investing in IPO. But the way, I mean, the valuation at which Lenskart is coming, I think it will not leave anything on the table at least for 6 months to 1 year time frame. Though directionally and the talks which the management has done is pretty aggressive in nature, but that has to first being delivered on the table for it to justify the present valuation. So we would be having more or less a neutral rating on this IPO.
Okay. So neutral on Lenskart. Let's pull up Canara Bank because on opening it's already hit a 52-week high. We've been discussing the news around foreign investor participation to have been hiked for public sector banks. Canara Bank, remember, has already the highest interest from foreign investors. So that one's spiking to a 52-week high. JK Tyre, let's also pull that one up for you. Profit up 64%. So really good set of numbers, and that's what it's reacting to this morning. Revenue was also up 10.8%. And remember, we have been watching out for a move on whether it comes to tire stocks, auto ancillary stocks on the back of the renewed momentum that we're seeing on auto. JK Tyre definitely standing out this morning and this quarter as well. Shell, what else are you tracking?
Well, Aabha, at the moment, record highs, and this time on Aditya Birla Capital. Remember, it's the NBFC space that's buzzing. A new stock from the blue chip category, the large cap space, Grasim has hit a record high. Remember, this is the flagship of the Aditya Birla Group. Lots of activity on the telecom space. That is a positive. Remember, Grasim is the mother company of Idea Cellular, where the Supreme Court has said for a relook on the AGR. Laurus Labs is doing extremely well. This needs to be looked at. From the railway space, HBL Engines at a record high, and of course, no stopping Karur Vyasa Bank. A word on Canara Bank, Aabha. Two subsidiaries have been listed. Canara Robeco AMC and their life insurance business with HSBC. This will be a behemoth 2 years down the line when the mergers are in place, and Canara will have 25,000 branches where this business will grow dramatically. So Canara Bank is the stock to look forward to.
All right, so Canara is the big highlight this morning, and of course some amount of action on earnings, JK Tyres. Let's pull that one again, and we've got Sonacom moving too, perhaps on sentiment, or perhaps we're seeing renewed momentum when it comes to that pocket of the market. But let's pull that one up for you as well. Auto ancillaries, tires, clearly some amount of traction building there as well. Dharmesh, we were anticipating this. Are there any favorites you have from the basket?
Played the entire theme last 2 quarters, and I think it's not time to take some profit off the table from the auto ancillary and auto space, because price-wise action, it will be difficult to move the valuations up the needle till Q4 rolls out. So November and December we are expecting a muted kind of auto growth as far as vehicle sales are concerned, and as far as tires are concerned, the only advantage they had with the rubber prices being internationally at this year low, it's a negative kind of a input price. So that advantage they had in the operating margin, which translated into the profitability. But our advice currently has been for traders to take profit off the table from both two-wheelers and four-wheelers. As far as new investment is concerned, wait for a dip of 5-10% correction. It's likely to come by the middle of November or early December, and then a fresh positioning can happen. So as of now, the traction and the dealer point check does not suggest the kind of aggression which we saw in the last week of September or early October.
Okay. Indus Towers has been moving gradually, through the opening session, again on earnings. So let's pull that one up again. Profit is down, but revenue was up close to 10%. So the stock is still seeing a good reaction, and it's now up 3%. Dharmesh, have you looked at Indus Towers recently?
The only overhang has been the idea part. And the profitability was for last few quarters was down because of the provisioning they have been making on the exposure to the Idea Cellular. So that recovery wasn't not there to the extent they would have liked it to. This quarter they have done a less of provisioning, and going forward the expectation is, as the indication is, that this issue is going to be resolved. So the moment the Vodafone Idea and government issues gets resolved, there would be sufficient cash flow with the Vodafone Idea to pay Indus Tower, and that would re-rate the stock to multiple high kind of a level. So very cheap, 8-9 times P multiple you are having with 20% plus kind of an ROE and a growth in place of 10-12% on the top line, which is likely to continue. So for long-term investors who have faith that this issue between Vodafone and the AGR dues and everything will be settled, can remain invested in Indus Towers. Good value buy.
All right, so double impact coming in on Indus this morning, not just earnings, but remember the Supreme Court has permitted the Government of India to consider grievances of the company on issues relating to AGR. So that's some relief coming in for Vodafone and by extension for Indus Towers there. So some amount of positive brokerage views also coming in this morning on the back of that. Where else are you looking within the market, Dharmesh? Let me get your top picks before we let you go this morning.
Yeah, definitely. I mean, we have a diversified kind of Diwali topics for this season, and that starts with Reliance Industries, which we think is fairly undervalued. Particularly the two businesses out of the retail division is far less undervalued. It's 2 times to sales, whereas same companies in the same segment is trading 6 times to sales. Plus, new energy and AI valuation is still not started discounting in that company. So that is likely to be multiple triggers going forward for next 2 years. Bank of India from the public sector banking space, we have been liking quite long, and that is already on its way up. It's likely to go further up, and 155, 160 is a near-term target for that. And this additional news flow which you shared with us this morning can be a further re-rating trigger for that. NTPC green energy from the renewable space looks pretty attractive to us. A lot of commissioning of power plants will happen, solar power plants will happen this year, and that will again set it for re-rating at the same place. And Tata Technologies from the technology space for automobiles. So last 1.5 years did not see any new launches because of tariff-related issues between different countries, which now gets settled, and things will start rolling in for Tata Technologies, and the acquisition of Aztec in Germany will also open doors for Volkswagen. So all big brands are into play. We are expecting 13-14% kind of a top line growth with margin nearing 20% kind of a level. So these 4 topics should augur well for next 1 year for investors if they remain invested. The minimum returns which we are expecting is 25 to 30%.
All right. Thanks so much for joining us this morning, Dharmesh, and looking quite positive across some of those stock picks. Shell, I know you said 26,000 is going to be tough to kind of meet and sustain. We've really been inching up and trying to claim it, through the week or through last week as well, or towards the end of it. What's your take? How's it going to look today?
Aabha, I think we'll have an FNO close. See, today it's the monthly expiry of the Nifty and the Bank Nifty. So we'll have a close above 26,000 as far as the Nifty is concerned. We are just 23 points away. But a very, very strong rally on the cards ahead. What's really interesting is that the broader indices are now outperforming the Nifty, as I had mentioned, a record high on NSE 500 already. I think we'll have sector rotation. Now that the Nifty is up 6% in October, November will see mid caps and small caps returning, and a smile on the back of many investors. This is a large cap rally. Not many of us hold large caps. It's the mids and small that make our hearts and brains tick. So we're looking forward to next week.
All right, Shell, thanks so much for joining us with that. We'll, of course, be back at 3 o'clock for all the action on market closing. Thanks so much for watching.
Good morning, ladies and gentlemen. Welcome to our fantastic coverage on quarterly earnings. We are today joined by Mr. Ashok Atluri, Chairman and Managing Director at Drone and Anti-Drone